Let's connect with N.J. Kumar, Managing Director of Prime Securities. Jakes, morning. Thank you for joining us, Jakes. It's very easy to make a bearish argument, but none of those bearish arguments have made their sense in last 1 month, because despite a challenging macro environment and a micro environment, Indian markets are holding on.
Absolutely. I think, in a sense, the mood is one of extreme caution, bearishness, pessimism, if you will. And I think we've been sort of facing, intense, should I say, variants of these themes over the last several months now. And, while this has happened, the 2-3 big things that have happened, one, clearly the rupee has weakened dramatically, which I think in the short run has overshot its fair levels by some distance. I think at the same time, you've had the oil prices cool off. Some would argue more dramatically than they need have, and I could probably say that after correction here, I expect oil prices to actually go down even further, so much so that the subsidy bill of the government could actually could be a very, very big beneficiary of this oil price collapse. And I think these are the big two takeaways, and in the context of this, nothing changes India's life more than oil prices, because oil prices determine subsidies, determine inflation, determine the dollar rupee, determine how much the government has to borrow in order to pay these oil bonds. I mean, oil prices actually determine virtually everything that has Indian macro written on it. So from that perspective, I think the coming off of Brent from 127 down to a low of 89.90 and then now at about 92.93 indicates that oil prices have really collapsed pretty dramatically, almost I would say 30-35%, and I personally believe that they could be headed even lower. Maybe they'll pause here for a bit and then come off. I expect Brent to cool off to maybe about the 80-82 level, and the WTI at about 70-75.
Jakes, morning. Do you think the crude cool-off is a trigger enough for us to scale up higher from the current juncture, or do you think the policy deadlock as well as the currency weakness and the RBI inaction to that front is going to scale us back?
My personal sense is that the policy inaction may well be a thing of the past. I say this because in the past 6-8 months virtually nothing has been done or said. Maybe that's already begun to change, but I think in reality it will change pretty dramatically, and I expect the Prime Minister along with his group of confidants to roll out a whole bunch of measures, some of which may be short on performance vis-a-vis expectations, like the bunch of measures relating to what RBI said a few days ago. But barring that, I think you will have a frequent stream of announcements and policy steps, which will, I think, convince the world that we aren't going to be sleeping anymore. And I'm actually very hopeful that a lot will happen on that front, in conjunction with steps to control the rupee fall, and in conjunction with the overall macro, which continues to be extremely difficult, especially as far as Europe and US are concerned.
Jake would appreciate an honest answer for this one. Are markets somewhere secretly happy to see back of Mr. Pranab Mukherjee?
I don't believe that on any of your responses I've given anything other than an honest answer. So, yes. I think the answer to that is an unequivocal yes. The markets were kind of frustrated and exasperated by the fact that the FM didn't deliver, and I think the fact that there's change, I think, is being welcomed. It's not so much Pranabda, but I think the person occupying there was just unwilling to do anything or say anything, and I think for the moment they're hoping that whoever takes off takes on the mantle will sort of say a lot more.
Jake, so potentially for next 6 months, what kind of market do you think we could be staring at?
I think we'd be looking at a moderately uptrending market. My own prediction or expectation is that we will probably attempt to scale 6,000 in the first quarter of FY13 calendar, which means Jan, Feb, March. I think closer to November, December, we'll be in the 5,800, 6,000 range. And I think it'll be a case of 2.5 steps forward and 1.5 steps back kind of thing. So it's kind of one of those gingerly moving forward, making a higher base as you go along, absorbing bad news, absorbing international macro which is negative. I think that's going to be the the style of the market. Clearly stock specific, infra and high beta names more in focus, defensives to be out, and I think the ITCs, HLLs, etc., a theme that you touched upon a little earlier in the program, will be sort of on the decline. The Indian consumption story is a bit under threat, and therefore these high Ps of consumption stories may well be a thing of the past, at least for the next 6 to 9 months, and money will move to a little more of the risk on kind of trade.
So Jakes, give us some names in terms of what would be good opportunities to buy now and then cash in the second half or early next year.
I'm not going to give names. I'm going to give sectors which we like. I think auto ancillaries we're very, very bullish on because they're principally export driven, and that's going to be our big theme. Export driven, engineered products out of India, auto ancillaries, textiles in a major way, maybe even things that we compete directly with China, things like shipyards for instance. We'd be very bullish on these kind of names, and local domestic infra, because I think some action will be forthcoming here. These will be the two. We're very bullish on pipeline companies, especially the majors who've been expanding out of India into the rest of the world and building up the oil infrastructure for the rest of the world. I think those companies are very, very interesting from our perspective. On the domestic interest rate sensitive theme, we'd look at specific private sector banks which we're quite bullish on, and that would be our major play. Select banks, infrastructure, export oriented themes. I think that would be the plate.
Market insider Jakes are telling me that as a house you're extremely bullish on Yes Bank. What makes you bullish on that stock?
I think the answer to that is yes. My own personal feeling is that the bank represents a fair amount of niche specialization in fee-based businesses. They've been doing extremely well. They've been keeping their other banking parameters pretty intact, especially their NPAs, etc. I think overall it's an extremely well-run bank. It's got a bit of the corporate finance flavor as well, courtesy Rana Kapoor, and I think that's a play that will be much sought after in times like this, where credit quality is important, but more importantly the growth is equally assured, and I think you'll have reasonably good growth coming in. The disclosure here we have is that our wealth management team and our own portfolios are interested in this stock, and therefore there is a disclosure we want to make here.
Jake, many of our viewers may not recall, but I certainly recall that as a firm, Prime Securities had identified Aban Offshore at about 90 rupees, went up to about 5,000. Which is the next Aban Offshore? Which is the next big multi-bagger you're betting on?
Difficult in times like this to put a name like this, but I'm really, it'll be very difficult for me to sort of give one name that may. There are a number of multi-baggers, but some of the pipeline majors, especially the largest pipeline company, Welspun, could be a 2-3 bagger from here over the next 24 months. I mean, this could easily be a 250 rupee story to 300 rupee story. That doesn't make it an Aban in terms of the percentage rise, but those were different times, and I think today something that could double over the next 2.5 years. I mean, there's massive restructuring which Welcorp is looking at. They're looking at extremely focused. They want to be the number one pipeline company in the world, pipeline company in the world. They want to be in different markets closer to the vendors. They're in the Middle East, they're in the US. That's where the big high margin orders are coming from. India has been a price sensitive market, and I think all the baggage, things like steel, etc., may well be shed, and this may become a leaner, cash flow positive and high on return ratios company in the next 12 months. And I think the pricing pressures may well be a thing of the past, because the new orders are all very, very good EBITDA margin orders. So I think Welcorp could be, in that sense, a very good 1.5 year play. Won't surprise me if the stock was closer to 250 rupees, let's say in 18 months from today.
Jakes, what about the currency picture? Do you think 55 to 60 is a level that we'll have to learn to deal with, or can we expect any bounce coming in soon?
I think the way I would look at it is that the RBI has been over a period of time focusing on certain spaces with telling effect. They focused on the real estate space, and they were dead against the kind of loans that were being disbursed to the real estate space, and that space has got hit periodically over the last several quarters. Similarly with the microfinance space, then came the gold finance space, because they wanted regulations, they wanted all kinds of restrictions on the kind of lending these people could get. Exactly the opposite is their focus, in fact brutal focus if you will, in the last several quarters on exports. So I think the RBI is extremely pro-exports at this point in time and believes that exports will be the way of reducing current account deficits. Export will be the way of actually moving ahead and solving our trade deficit problem. And by the same token, they believe that a weak rupee goes hand in hand with making exports more competitive. The weak rupee also starts killing demand for oil, etc., and oil prices have also come down in response to the fact that the major economies have stopped in a sense growing as much as they were anticipated in the 7-9% range, etc. So given all that, a weak rupee, thrust on exports, higher refinancing limits, higher incentives on interest subvention, all these things make the exports industry and the manufacturing exports especially very positive. So from that perspective, I believe that the RBI will make sure that the rupee remains weak. Maybe the 57 is an overshoot. I personally believe that a range of 52 to 54 may well be the, I don't want to say right, but the more correct range in my scheme of things at this point in time.
Jakes, do you think globally the world is pricing in too much of risk? There is enough liquidity, but all the liquidity currently is hiding either in German Bund or in US Treasuries, which give you what, a 1.5% yield.
Sure.
Do you think it's a matter of time money will move out of German bonds and US Treasuries?
I think money has already started moving out of things like commodities, which was the haven for QE money, as I call it. Once that money started moving out, it needs to find alternative assets. And I believe that given the long winter of discontent that we've had as far as equities are concerned worldwide, maybe we will find that money starts moving in selectively into spaces like India in the equities world, once having determined that money will move to equities. In fact, the favorite question amongst most market pundits right now is, why is it that FIs have not sold in India? Why is it that they don't sell on rallies and they don't sell on declines as well? And I think the answer is really clear, that I think if India's policy paralysis were to actually meet with some degree of thaw, which means it actually started opening up and we started getting a little more policy action, I wouldn't be surprised at all that India then regains, even at a lower 5.5% or 6% growth rate, regains its oasis in a desert kind of status, if you will, and therefore starts getting more money in a context where equities generally start getting in more money. Because let's not forget one thing, that equity markets peak out when the stock issuances are at a peak, when euphoria is at a peak, when moods are extremely buoyant. Today moods, by corollary, as a contrary theme, are extremely pessimistic. Euphoria has completely turned to despair almost, and stock issuances have been replaced by stock buybacks. A company like Reliance, which has been issuing stock ever since 1978 or 79 when it went public, almost every second year, virtually every second year since from 78 to 2000 odd, for the first time today is in the middle of a 10,000 crore buyback, has completed about 2,500 crores and continues to do so. Like Reliance, like ABB, like Alfa Laval, Siemens, Atlas Copco, and a whole bunch of Indian companies, whether buybacks or delisting or promoter creeping acquisition, the world from an Indian equity standpoint is seeing equity contraction, not equity expansion. And every day the stock of equity in the market in a sense goes down because of actions like this. So the reduction of equity in a sense in the secondary market through all these mechanisms, plus the despair that prevails in the market at this point in time, moods being very downbeat, all this means we are exactly the mirror image of what we were in 2007, early 2008. So from that perspective, I think the markets will find feet, money will continue to trickle in. At some point in time, we'll have that rally where the markets move up 10-12% in a month. We may be, who knows whether we are 1 month away from it or 4 months away from it. But I believe the move from 5150 to 5,800, 6,000 is a 18% move, and we may well have set out a base to do that over the next 6-8 months.